Hi everyone, welcome to view my final presentation for Financial Accounting and Managerial. My name is Chih-hsiung Tseng. The subject of this presentation is to select an industry and choose one public trade company in this industry. Acquired a recent annual report and write a short report comparing and contrasting selected company and answering the question about selected company. The industry that I choose is appeal retailers, such as Pacific Somewhere, Abercrombie & Fitch, Aeropostal, American Eagle. Pacific Somewhere of California Inc. is the company that I will focus on in this presentation. Pacific Somewhere of California, also known as Tseng, is a US-based retail clothing company. Founded in 1980, Tseng's headquarters is in Anaheim, California, and operates a distribution center in Kansas City. Tseng is a retailer that sells surf and extreme sports-styled clothing and accessories to teenagers and young adults through its Tseng store and outlets in malls. Tseng sells merchandise in three different categories. Young men's apparel is 45% of total net sales, and junior apparel is 43% of total net sales. Finally, accessory and footwear is about 12% of total net sales. 48% of Tseng revenue comes from the sales of its own brand merchandise, and branded items generate 52% of the company's revenue. As of May 1, 2010, the Tseng operated 758 Tseng stores and 125 Tseng outlet stores for a total of 883 stores in 50 states and Puerto Rico. 30% of its stores located in California, Florida, and Texas. Tseng operates an e-commerce website at www.tseng.com, which sells Tseng merchandise online, provides content and community for its target customers, and provides information about the company. The e-commerce sales represented around 5% of Tseng total sales for the year 2009. In a sluggish economic, retailers like Tseng suffer because consumers cut back on spending, rather than spending money on full-price brand-name items. Consumers can find the same items for lower price at discount retailers like TJ Maxx, Marshall. This is particularly relevant to Tseng because its target customers are teenagers who rely on their parents to purchase clothing. In 2009, the company's store sales fell by 20% due to the weak economic. Now, let's do some comparison with competitors of Tseng in the same industry. Here are top competitors of Tseng. Tseng is one of the main competitors in used apparel retail market, generating over $1 billion in sales. However, unlike other teen apparel retailers such as Abercrombie & Fitch and American Eagle, which sell only their own private label products, Tseng's sales rely heavily on third-party branded merchandise. Here is a top competitors comparison chart on key measures. From this chart, you can see Tseng's revenue and profit margin is low compared with its competitors. For conclusion, Tseng performed poorly compared with its competitor based on these key measures. Tseng did not generate a good portion of private label goods that have higher profit margin. As a result, Tseng's profit margin are lower than its competitor. Also, Pacsung's extreme sports style do not have a wider customer range compared to Pacsung's competitor. Now let's go through the question from textbook. First question, determine whether the company prepared consolidated financial statements. If so, did it use the purchase method? How do you know? We can find the answer in Pacsung Form 10K 2009, page F7. Principle of consolidation. It shows the company's definition of consolidation. Next, Pacific Somewhere did use purchase method for its store acquisition. We know it from consolidated statement of cash flow, sub-account, asset impairment, which is including goodwill. Next question. Does the company use the equity method for any of its investments? Pacific Somewhere did not use equity methods to record any of its investments. There is no indication in company's balance sheet and income statement. Does the company hold any investment in security? If so, what is their market value? Does the company have any unrealized gain or loss? No, there is no entry for unrealized gains or losses in company's statement of cash flow, and the income statement do not show any gain or loss adjustment related to investment. Identify the company's line of business. Why does management want to engage in this business activity? Company's line of business is selling used casual apparel and operate a mall-based chain store under the name Pacific Somewhere and Pacsung. Next question. Compute the return on assets ratio from the two most recent years reported. What do the results suggest about your company? For Pacsung, on 2008 January, ROA ratio was minus 9.66%, and 2009 January is minus 13.5%. The TTM ROA ratio is minus 18.9%. It indicates this company performed poorly on managing its assets. Now it concludes my final presentation. Thanks for viewing. Have a good day.